Hey, what's going on, guys? John Fibonacci here. Welcome back to my YouTube channel. And in part 2 of this beginner's guide to trading, all right, that I've made publicly for free for all of you, we're going to go over some trading instruments, right? Stocks and ETFs, talk a little bit more about Forex and a little on commodities, all right? So first up, stocks and ETFs. So what I've done is I've gone over into an app called TradingView. Now, this is also a website. You're more than welcome to go there, tradingview.com. I do suggest to make an account. You don't have to have a paid account if you don't want to. I do have the highest level of the subscription that you can purchase. If you wait until Black Friday, right around that Thanksgiving time here in the US, they do like a 50, 60, 70% off for the year. So it's a couple $100, and then you get all the cool stuff for like a whole year. So you can do that if you want to, but it's not required. Okay. But tradingview.com is where you can do that. You can get the app here too. So Apple, okay. AAPL. Over here is my list of stocks. It's just, this is in order by the symbol. So it's going to be in alphabetical order, like Apple, Airbnb, so on and so forth. Now, this list I just made manually. You can add your own or take them off or whatever. But this is AAPL, which is Apple. So if you are, for example, Team iPhone, right, then you purchased the iPhone from Apple. Okay. So this is what their stock chart looks like on a daily time frame. And if we zoom out, this is pretty much the year of 2024. At the time of this recording is 2024. So we can see that, what happened. They traded lower. That's essentially right where everybody wants to be buying it when it's cheap. And now it's higher than it was. So anybody who's been buying the stock down in the 160s or even like as high as the 180s, it's right now buying and selling for 226. But prices of stocks, they fluctuate. And we'll get into the studies on that later. But every single one of these candlesticks represents a day, right? So this could be Monday, the next day it could be Tuesday, Wednesday, so on and so forth. So on this type of time frame, it takes a long time for this price action to pan out. And if you're looking to actually purchase shares outright, then yeah, like if I wanted to buy a stock today, it would cost $226.28 at the current, like right now, if I wanted to buy it. Okay. And all of your favorite, companies are going to be here. You've heard of people Googling things, right? Oh, I'm going to Google how to trade, how to do whatever, how to drop a like on the stream, right? How to do stuff like that. This is Google. Now, they used to be really expensive. They did a stock split. They used to be over $1,000 a share, and they did a split. It divided, and now we're at $166 a share. So maybe that's too expensive. Maybe you want something a little bit cheaper. I mean, I don't do it that way, but say Nike, for example. Okay, if you like the Nike's brand, maybe you got Nike shoes or sneakers, whatever, something to that effect, that you have that here. They had an earnings report back in June, more on earnings later in the series, but their stock took a pretty big nosedive, traded lower down in the 70s for a little bit, and now it's up at the 83. So I don't think they've actually had a good year so far. 2024 is right around here. They were at 100. They went all the way down to the 70s. So Nike's not doing too well over the past couple of years, and I won't get into it, but it's there. If you guys watch Netflix, okay, I watch Netflix. I have no shame in that. And we just hit all-time highs too. That's lovely. I actually have Netflix shares, just so you know. I've been holding on to them for years. So it's been pretty fun so far. But anyway, if you watch stuff like Game of Thrones or, I don't know, Bob's Burgers or SpongeBob or something, and you have a Netflix account, right, you can actually trade Netflix. You can own a very, very, very significant piece of Netflix. And again, everything's going to be here. If you have a Facebook account, you know, you could trade Meta. This used to be Facebook. They changed their name to Meta, right? So you have that and all type of stuff. If you own a laptop, maybe it's an Intel laptop. I just bought an Intel laptop actually, right? Their stock has been getting wrecked, but it's just funny. So if you own Intel, you know, or haven't, you know, a piece of equipment that has Intel, you know, they have a stock too. So you're more than welcome to go through the list if you want to or on your own. JP Morgan is a pretty good example. I notified a lot of my traders, my students about JP Morgan back in March of 2023, right in here, right around 123 a share. And we have absolutely been flying the last year and some change. Now it's at over 200. And I think it's at all-time highs or very close to it as well. So it pays to hold stocks for a really long time as long as they remain bullish, right? Now, one thing I'll go over here too before we transition over into something else, into the next thing, is SPY. I wanted to talk about this for just a minute. SPY is the S&P 500. It's an ETF. So there are people out there who might say, well, I don't know anything about stocks. I don't want to purchase a single stock because what if that company goes bankrupt, you know, so on and so forth. You know, I don't know what's going to happen. And I'd rather just, you know, buy a basket of companies. That's pretty much what SPY is. So you're not buying an individual stock. You're buying basically a lot of stocks. Okay. So SPY basically represents about 500 stocks. Okay. I'm not going to go through all those individually, but there are people out there who will tell you that buying SPY or even the triple Qs, which is NASDAQ, it's more of a tech sector, but they believe that buying the general market like triple Qs or SPY is a bit more safer. That's what they say. Investing involves risk no matter what. Trading definitely involves risk. But, you know, in a general sense, like if you zoom out, say over the last, I don't know, few years, here's 2018 all the way to today. You know, stocks in the long run, right? Most people want a bullish stock market because they have either individual stocks or they have a 401k, like a retirement plan. So these pullbacks in the stock market might be pretty scary, you know, because their 401k is taking a pullback. But over the long run, generally, you know, 5-10 years out, the stock market usually goes up over a long period of time. So now we can look into Forex, right? The foreign exchange. So I have a different list for that. I have a list called currency. So what I have, there's two small lists on here, right? The majors and some cross pairs. Now it's not all the cross pairs, but the majors, I have the DXY, which is the dollar index. The dollar index is very, very important. If we were to look at the global markets, just all the markets together as like a spider web, the dollar index would be probably near the center of that. So the dollar index is very, very important. Even though the biggest piece of that is the euro, the dollar going lower can potentially make stocks go higher. It's called intermarket analysis. I won't get too deep into that. But just know that the DXY is very, very important, especially if you're going to be a currency trader or a Forex trader. So that's the dollar index. All right. Next up is USD CHF. And if you take your mouse and you highlight, say, over this, it'll tell you right there, US dollar versus the Swiss franc. The next one is the yen, right? UJ, otherwise known as Ninja, right? Swiss franc, its nickname is Swissy. So for Ninja, right, UJ or USD JPY, you have that there. USD CAD, otherwise known as Loonie, right? US dollar versus the Canadian dollar. The Euro USD, otherwise known as the Euro or Fiber. British pound, which is the Great British Pound versus the US dollar, otherwise known as Cable, as its nickname. Australian dollar, right? Australian dollar versus the US dollar, otherwise known as Aussie, and the New Zealand dollar, also known as Kiwi. That's the New Zealand dollar versus the US dollar. Now, what you can also do is you can see that the euro has its own chart, British pound has its own chart, but you can also pair the euro against British pound. All right, so that has its own chart as well. And yes, I'm telling you that for a reason, because it is important. And I did write a chapter about that in my book. I think it's like number 9. And it's the relationship, right, between the euro and British pound and the cross pair euro GBP. So that's pretty cool. But yeah, that has its own chart as well. Now, if I used to trade a lot more Forex than I do now, if I trade Forex now, it's almost never the cross pairs. It's almost always the majors. Okay. So I like the majors. I can use the cross pairs as a reference, but I predominantly focus on the majors. All right. And the last one I'll show you is the commodity metals. You have copper, which I don't trade, palladium, I don't trade platinum, I don't trade I made this list a long time ago and just never edited it, but I could take some of these off if I wanted to. One of the most important things for me is going to be the gold market, XAU, USD, right? You know, you've seen people wear gold chains and stuff. That's gold, okay? iPhones have like $2 worth of gold in them. You know, gold use, there's a lot of industrial uses for gold. And actually right now we're at all-time highs. It's been very, very bullish. Silver as well has also been very, very bullish. Not as much as gold, but here's silver, XAG, USD. So I, not to brag or anything, but I did call out on Twitter both lows of 2023. And so, you know, it's not really an I told you so, but, you know, wink, wink, right? That was at around 20 and 21 and a half. And right now we're trading at 29.80s. So almost back in the 30s. And we'll see if we can get into the 34 or 35s here within a couple months or so. I don't know. I'll know in due time, but that's what that looks like. Okay. So we did go over some stocks and ETFs. I just made a short list here. Google, right? That's its symbol. Apple, Netflix. You can kind of tell. Nike, SPY, Triple Qs, and Meta. We went over the Forex market, right? Some of the list on it, the Euro USD, which is the Euro dollar, Fiber, British pound, cable, Euro GBP, which is the Euro versus British pound. That's a cross pair. Dollar, right? Dixie, the US dollar index, right? And majors and cross pairs, we went over a couple of them. And then the commodities, right? Gold, XAU USD, silver, XAG USD, and oil. I didn't show you oil. I haven't traded oil in a really long time. It's under my commodities list, probably somewhere. US oil. Okay. I don't really trade oil all that much anymore. I used to trade oil and Halliburton and stuff like that a long time ago, but you know, it is important for you to know and to watch. A very long time ago, oil had went negative in the future side. I think it was way back in here, right? Back in April of 2020, that was right near like the lockdowns and stuff in the US, which I'm not going to get into, but all that to me was garbage. But I do know that when the lockdowns began, people stopped driving. And that was a fundamental force that basically said, look, we got all this oil and all this gas, nobody's driving. So there's a big surplus of gas, right? All the gas stations were full, all the storage facilities that hold that kind of stuff was full. And so, you know, with a very, very increase in real supply and a drop in demand, nobody wanted it. So the prices really sank and went really, really cheap. And I told everybody about Halliburton back then, because they're an oil and gas company. And, you know, that we would probably go back up relatively quickly, and we absolutely launched for the next couple of years. So the last year or so hasn't really seen too many big swings, but I remember saying, hey, your gas is super cheap right now, but prepare for higher pricing at the gas pump. And that absolutely occurred, which was cool. But that will pretty much cover some of the trading instruments. All right. So thank you guys so much for being here. The next one is going to be part 3 on the terminology. All right. So again, drop a like. I would greatly appreciate that. Leave me a comment, or if you have questions, you can leave them there too. And if you haven't already subscribed, make sure to subscribe to the channel as well. Thank you guys so much, and I will see you in the next one.